All right, welcome back to the deep dive. Today we're jumping into something really timely.
We certainly are.
We're dissecting the whale markup scenario report for Bitcoin. Our mission really is to figure out why all this pain we're seeing in the market might actually be the final step before we see some real momentum.
And it's such a contradiction, isn't it?
Mm.
Anyone just looking at the price chart sees us hovering around, what, $84,000? And the sentiment is just stuck in extreme fear.
Right.
And normally that just screams more downside. But the on-chain data, it's telling a totally different story. What, like a final cleansing?
Okay, let's unpack that because this feels like a classic Wyckoffian shakeout, right? We've seen this playbook before.
We have.
For anyone who isn't familiar, it's basically where the big players intentionally push the price down to shake everyone else out. And the proof is that $1.2 billion long liquidation. I mean, just a massive sweep.
Violent reset, yeah.
So how do we know this is a cleansing and not, the start of a real collapse?
It all comes down to a simple question. Who is selling and who is buying? And that's where the HODL wave data gives us absolute clarity. It shows the supply moving from weak hands to strong hands.
Okay, so tell us about those strong hands.
They're your long-term holders.
Yeah.
ATHs. We're talking about wallets that haven't touched their coins in over a year. Their conviction right now is, well, it's absolute.
They're not budget.
Not at all. The percentage of dormant coins they hold is near multi-year highs. If the whales were actually selling, we would see that number dropping. It isn't. They are absorbing, not distributing.
So if the veterans are holding tight, that means the entire $1.2 billion sell-off that had to come from the newer participants.
That's it. Exactly. All that panic is concentrated with the short-term holders, the STHs, people who've been in the market less than 6 months. The price dips, and you can see in the data, they just panic sell at a loss.
Okay, so if we switch from behavior to actual profitability, that's where a metric like SOPR comes in to confirm this, right? The spent output profit ratio.
Yes, and this is the fascinating part. The SOPR just dipped and is holding firmly below 1.
And a SOPR below 1 means?
It means that, on average, coins being sold are being sold at a loss. It is the textbook definition of capitulation. It's confirmation. So the whales get to buy up all this cheap supply, creating the scarcity they need before the real move.
Markup.
The markup.
Okay, so the structural work is done. That brings us to the actual mechanics of what happens next. That huge drop cleared out all the reckless long leverage.
Which is vital. It creates the conditions for a sharp, clean reversal instead of a slow grind.
So what's the actual fuel for that reversal? Where does it come from?
It's not new buyers. Not yet. The fuel is actually the people betting against the market. It's the massive wall of cumulative short liquidation leverage that has been building up this whole time.
Okay.
If you look at the liquidation maps, there's this huge, dense wall of short interest that starts right above $90,000. It just gets bigger all the way up to $100,000 and beyond.
So the market is basically sitting on a powder keg of short positions. So once the whales have absorbed enough and start pushing the price back up past that local resistance,
It becomes a self-fulfilling mechanism.
a short squeeze.
A massive short squeeze. Those positions are forced to buy back to cover, which pushes the price up even faster, which liquidates the next level of shorts, and on it goes. That's the ignition for the true markup phase into six-figure territory.
So to tie it all together, the structure survived the shakeout. We know the fundamentals are still strong metrics, like the MVRVZ score are way below bubble territory, so there's plenty of room to run.
The foundation is firm. The necessary pain has been dealt with. The supply has been transferred. And the trigger is now officially primed.
So what does this all mean for you listening right now? The final signal of the short-term selling is over. We'll be seeing that SOPR metric start printing green bars above 1.0 again. But here's the real thought to consider. Given all that stacked short liquidation fuel, what specific price level above $90,000 do you think needs to break to tap into that fuel and kickstart the real acceleration? Keep an eye on that level.